Welcome to Second Take, the show that takes a look at the issues behind the news. A pre-procurement exercise is underway to test market appetite for private sector participation projects on key commodity and general freight corridors. Terence Creamer joins me to discuss the significance of this development. Hi, Terence.
Hi, Chanel.
A request for information has been launched. What does it say?
Well, the background is really this collapse in rail service and poor performance around our ports, and wanting to crowd in private sector investment into those. So and they want to now government wants to test the market appetite so that when they put out actual tenders, there are going to be bids and there's a prospect of these projects being funded and also reaching financial close. So the RFI is really wanting to seek information around projects that could be developed around commodities such as manganese, iron ore. Those are the commodities that go out of Saldanha Bay and Nelson Mandela Bay respectively. And then also the coal, chrome, magnetite corridor, that's the big Richards Bay corridor, as well as some of the intermodal corridors, Durban and also Kruger and Cape Town are important for containers as well as automotives. So looking at looking for information or feedback over the next 8 weeks or so from private sector potential investors and otherwise other stakeholders along those lines. They also said it's open to Labour to put in its concerns, because obviously there's a concern around privatisation and what that could mean. But basically, I think wanting to get real partnership opportunities either on those rail corridors or at certain of the ports, and whether those would really firm those up and then get it into a document form to release to market.
What has the reaction been from business?
Well, I think it's been positive so far. The rail industry in particular said, this is a departure from the past where this was done in a vacuum behind closed doors by Transnet and then put out to market. It didn't always have the buy-in from the private sector. The commercial value of it wasn't very clear. So the fact that they have input up front, or can have some input into shaping and crafting what the tenders will look like, I think is important, that it's not just coming out of the blue, take it or leave it. It's a bit more consulted. So I think that's a positive development. And also it shows that there's actual serious action now around private sector participation. We know that this is a massive issue for South Africa. We see it as, in our normal daily lives, the amount of trucks that have had to come on the road that have basically bailed out our rail network. And we need to start getting some of these corridors, especially for rail-friendly cargo, particularly around the commodities. There's been a lot of those corridors. They've been affected severely by theft and vandalism, and there's already been quite a good improvement in terms of working with, say, the miners to try and harden those infrastructures so that criminals can't access them as easily. But we still aren't anywhere near where we should be, and the big target is this 250 million tonnes of freight being moved on rail by 2030. And last year, or the last time it was recorded, I think Transnet had fallen all the way back to sort of below 150 million tonnes. I think it was, and that was a recovery from where it had been in the COVID period. And we are seeing steady uptake, but that there's a big gap between, say, 160 million tonnes currently, which is, we don't know what the figure is, but it's around that level for the last financial year, to that 250 million tonnes. So it's all about getting those volumes back up.
When is procurement likely to start, and how will it be managed?
Well, when the Minister released the RFI, Barbara Creasy, she indicated that there'd be this consultation period, or this RFI process, get the feedback on these sort of three broad areas that I mentioned. And then in the parallel, there's going to be a setting up of a private sector participation unit in the Development Bank of Southern Africa. Looks very much similar in design to what we've had in the RPP office for many years, going back to the 2010, 2011, that has procured, independent power producer, mostly renewable energy projects since 2011, say 7,000 megawatts they've also now been designated as the authority to buy the first independent transmission project. So that's still going on. They are looking for a new chief executive there. But this looks like in a sort of a similar mould. Set up a unit with Treasury, with the Department of Transport, with DBSA, and set up a professionalised unit that's able to put out tenders. And I think what Minister Creasy indicated is around August, end of August, we should start seeing the first tenders. Put out those tenders, have a proper adjudication process with professionals involved, have the preferred bidder announcements, and then once that's when the sort of rubber really hits the road, get those preferred bidders to be able to take their projects with all their contractors, with their financiers, the banks, and to get that, and their lawyers, to get that to financial close. And that's always the trick. So this is not an immediate quick fix. This is going to involve some time to get some of these projects into a market-friendly tender, or RFP as they call it, and then actually to get shovels in the ground, and then eventually operations, and eventually those volumes that we're talking about.
Separately, 89 bids have been received for rail slots released previously following the publication of a network statement.
Yeah, so the network statement was the biggest game in town last year, and there was a lot of concern about how it was going to be drafted and whether the tariff was going to be feasible. It was then published in December with tariffs that the private sector thought were realistic at that stage. Since then, the TRIM, which is the new separated infrastructure manager in Transnet Freight Rail, so you've got the Transnet Freight Rail operating company, so that actually operates the rolling stock, and now you've got the infrastructure manager, TRIM, and they are applying for new tariffs. So that's put a bit of a uncertainty, because there would be much higher tariffs on certain corridors, but there are these bids, and so this is not the PSP we're talking about. Can have a rolling stock element, but it can also have an infrastructure element. This is purely the train operating companies using the existing network of Transnet and relying on that existing network to provide a service to their own clients. And so it's what is better known, I suppose, out there as third-party access. So this is where we're at. There's a number of bids in, but as I say, there's this tariff overhang that we have to get certainty around. Also, there's the network statement gets updated every year, so that also is a bit of an overhang where it creates some uncertainty, but it will be on the network statement that was published in December. So it looks like there's appetite. The issue is now they have to adjudicate those, whether they're realistic offers, and then they need to take that through a process of getting those to operational contract stage. Now the big issue is here, I think, more as much as the tariff is huge, is the state of the network. Now if you're a train operating company, it's a massive investment. A locomotive apparently is $4 million. A train of 100 wagons is 600 million rand. It's a big upfront investment. Now you need to have that asset sweating, and you need to be able to do that by offering a service to your client that they know is going to be reliable. Now, what about the state of key corridors, say, for instance, the corridor from City Deep down to Durban? It doesn't operate a lot of trains. It's nowhere near its design capacity, and that's got to do with vandalism, theft, poor outdated signalling systems, poor maintenance, a massive maintenance backlog. So I think there is appetite on certain corridors, but it's going to be interesting to see where these first train operating companies come in, and hopefully we can convert some of these bids. But it's early days. There's going to be a lot of teething problems. I think there's still a lot of uncertainty, but it needs to happen. I'm just not sure it's going to happen as quickly around in this first round. I think once we get into a rhythm and there's a bit more a feeling that Transnet's got its hands around this network problem, which is the poor state of the network, I think then we'll have much more trust in the system, and we'll start having private sector investing in these big trains. As I say, massive amount of upfront capital needed there. Until that, I think we'll maybe see a few things happening on the margins, but we need the network to be upgraded, and quite urgently. And And to Transnet's credit and to Minister Creasy's credit, they're not relying purely on the PSPs to sort out the network. We know that highly indebted Transnet doesn't have the balance sheet to do what it has to do, but there is this budget of finance infrastructure facility in the Treasury. It's going to have multiple windows, and I think it's going to be Transnet heavy.
Thank you. That's the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis. Also, don't forget to listen to the audio version of our Engineering News daily email newsletter.